Ladies and gentlemen, good day and welcome to Sunteck Realty's earnings conference call for the Q4 and full year FY22. We have with us today Mr. Kamal Khaitan, the Chairman and Managing Director of the company, Mr. Manoj Agarwal, the Chief Financial Officer, and Prashant Chaubey, SVP Corporate Finance. Note, this call will be for 60 minutes, and for the duration of this conference call, all participant lines will be in the listen-only mode. This conference is being recorded, and transcript for the same may be put up on the website of the company. After the management discussion, there will be an opportunity for you to ask questions. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Before I hand the conference over to the management, I would like to remind you that certain statements made during the course of this call may not be based on historical information or facts and may be forward-looking statements, including those related to general business statements, plans and strategy of the company, its future financial condition, and growth prospects. These forward-looking statements are based on the expectation and projections and may involve a number of risks, uncertainties, and other factors that could cause actual results, opportunities, and growth potential to differ materially from those suggested by such statement. I would now like to hand the conference over to Mr. Khaitan, the Chairman and Managing Director of the company. Thank you, and over to you, sir.
Thank you for joining Sunteck Realty's fourth quarter and full year 2022 earnings call. Hope each one of you and your family are safe and healthy. At the outset, similar to previous quarters, I would like to reiterate yourselves to the guiding principles of new Sunteck, what we call Sunteck 3.0. Sunteck 3.0 is focused on 3 key priorities. 1, maintain a strong balance sheet and cash flows. Continue to do marquee acquisitions in line with our business development strategy. And building an exceptional team. In the year gone by, we have achieved strong sustained growth in both pre-sales and collections. In fact, on both the parameters, this is our best ever performance till date. The strong operational performance has enabled us to generate more than rupees 400 crore of operating cash flow surplus on a cumulative basis for the past 2 financial years. In line with our Sunteck 3.0 framework, we continue to maintain strong balance sheet with net debt of equity of 0.19 despite of new acquisitions and the advance premium payment of more than rupees 200 crore to avail the 50% benefit in premium from the state government. This will enable us to sustain our margin in a cost inflationary environment. In the cost inflationary environment, our in-house construction capabilities is enabling us to maintain accelerated execution and also the stringent supervision on cost and quality. I'm happy to note that Sunteck Westworld project at Naigaon has received occupation certificate. Execution at our other projects are in full swing, namely Sunteck City 4th Avenue and Sunteck City Pinnacle at ODC, Sunteck Maxworld and Sunteck One World at Naigaon, Sunteck Icon and Sunteck BKC 51 at BKC Junction, and Sunteck Crest at Andheri. On the business development side, we have done one of the highest acquisitions during the COVID-19 pandemic, acquiring approximately 23 million square feet across MMR. Going forward, our endeavor is to capitalize on our strength of business development and continue to do similar acquisitions over time. I'm happy to note that in the first quarter of FY23, we have launched a premium residential project on a 50 acres beachfront land parcel at Vasai West, namely SBR Sunteck Beach Residences, for which we have got an overwhelming response, which will be reflected in pre-sales number of the current quarter of FY23. The launch of new project at one end and the spectrum like SBR Sunteck Beach Residences at Vasai, and completion of project at the other end of the spectrum, like Sunteck Westworld at Naigaon, gives us immense joy and confidence to keep on striving to do well. Last but not the least, I am very proud of the team that we have built at Sunteck in the last 15 years, and we are focused on strengthening it further. Thank you, everybody. I will now hand over the call to our CFO, Mr. Manoj Agarwal, for his comments. Thereafter, I would be happy to answer your questions, if any. Over to you, Manoj.
Thank you, sir. Good evening, everyone, and thank you once again for joining us today. Take out your valuable time for Sunteck. Hope all of you are safe and well. The financial and operational numbers have already been published on the stock exchanges. I believe all of you must have gone through the same. Now, I would like to highlight the key financials and business performance numbers. Our pre-sales grew up by 43% on quarter-on-quarter basis in Q4 FY22 to rupees 503 crores compared to rupees 352 crores in Q3 FY22, and an increase of 36% on year-on-year basis from rupees 371 crore in Q4 FY22, which is the highest ever achievement for this year. Collection grew up by 50% quarter-on-quarter basis in Q4 FY22 to rupees 404 crores compared to rupees 272 crore in Q3 FY22, and that is an increase of 26% on year-on-year basis from rupees 321 crore. For the period 12 months ended FY22, the pre-sales grew up by 27% on year-on-year basis to rupees 1,303 crores compared to rupees 1,022 crores in the last year, which is a highest ever pre-sales for the year's achievement. Also, the collections grew up by 35% on year-on-year basis to rupees 1,053 crores compared to rupees 780 crores in the comparative period, is again also highest ever achievements for the year. With respect to the financial highlights, we have reported a consolidated revenue of rupees 156 crores in Q4 FY22 compared to rupees 122 crore in Q3 last quarter. On 12-month basis, the revenue for FY22 stood at rupees 513 crores compared to rupees 614 crore in the comparative period last year. The consolidated EBITDA for Q4 FY22 is rupees 3 crore as compared to rupees 35 crore in the last quarter. EBITDA for 12 months March 22 stood at rupees 95 crore compared to rupees 137 crore in the last quarter. We can now open the forum for questions for the participants. Thank you very much.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to the participants, please limit your questions to 2 per participant. Should you have any follow-up, may be requested to rejoin the queue. The first question is from the line of Aditya Chattopadhyay from ICICI Securities. Please go ahead.
Yeah, good evening, everyone. Thank you for the opportunity. Sir, my first question is on our sales guidance for FY23. Maybe not a specific number, but at least the lower end or upper end of a sales trajectory which you can see, considering that you have got many launches lined up this year. And if you could break that up into new launches, how much sales would come from there and how much would come from the existing inventory? That is the first question. And second question is, what is the visibility on the business development pipeline for the coming year? Thank you.
Yeah, good evening, Aditya. Kamal Khitania. So your first question about the sales number, pre-sales number, we are looking close to obviously 1,800 crore sales for the current financial. And out of 1,800, we feel substantial, at least 33% 35% should come from the new launches, 35 to 40% should come from the new launches. So minimum of that kind of number. Coming to I think the second question is on the business development front. As I said in my opening statement, that we have done one of the highest acquisition of close to 23 million square feet in this COVID-19 pandemic, and we continue to we are looking at acquisitions, and you will see this momentum continue for next at least 12 to 18 months going forward.
Sir, if I may just squeeze in, sir, what will be the value of the launches you'll be doing? The total means which project? Vasai we have done the launch you've said, and are you going to launch hard? I don't know, Borivali and a few other projects this year as well. Yes,
yeah, so at least we are confident of at least launching one more project in the current financial year, and these are all big projects. We are not launching any small projects. The sizes of these projects are they are huge size. So this will add substantial to our sales from the existing projects.
Okay. Fine, sir.
From the existing projects.
Okay. Fine, sir. I'll come back in the queue. Thank you.
Thank you. Thanks, Arpit.
Thank you. The next question is from the line of Rahul Jain from Dolat Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. So a couple of questions. First one is on ODC. If you can give a sense of how is the footfall trending versus last quarter, and is it fair to assume a 120 crore run rate, a quarterly run rate that you will be sustained in that particular project? And the second one is on JDA opportunities. How are you seeing that panning out versus last year? I mean, is there any dilution in economic share that you are seeing on the ground? Thanks.
Yeah. So as far as ODC is concerned, I think the current run rate we are confident of maintaining our current run rate. That is not a problem what we are seeing. In fact, demand is very good, and we are not the momentum of the sales is not reducing in spite of what we have increased the pricing. So that is one good thing I can confidently talk about. Again, as far as JDA, I just answered this question, whether it is a JDA or a good acquisition, distress acquisition. We will continue to be very aggressive. At the same time, we are very clear that we will not compromise on the quality of the balance sheet. We will continue to maintain our debt level low in spite of new acquisitions because of the strong cash flows from the existing projects.
Got it, sir. Thanks.
Thanks.
Thank you. The next question is from the line of Biplab Debbarma from Antique Stock Broking. Please go ahead.
Good afternoon, sir. Sir, my first question is on the price increase. So in FY22, what would be the average price increase price hike you took in ODC and Naigaon?
5 to 10. So Biplab, this is Prashant this side. Good evening. So in both ODC and Naigaon, we have achieved close to 5 to 10% price increase in FY22.
Okay, that's good. And second question is on just trying to understand the numbers. So what would be the total receivables, and what would be the cost to be incurred for finishing the ongoing projects? Just trying to understand the cash flow match.
Right. So Biplab, in terms of the balance cost to be incurred for the ongoing project, around 900 crores, right?
Mm-hmm. Yeah.
And against that, the balance receivables from the ongoing projects, and this includes our fourth quarter launch of Sunteck One World as well. Mm. So the balance receivables is close to around 1800 crores.
Okay. And if I may squeeze one more question. I was just checking the the financials. So the margins, EBITDA margins, if you remove the other income, is around in FY21-22 is below 25%. It's around something like 22 and 19%. Whereas the margin were a lot higher in FY19-20, around more than 30%, more than 44%. Is it because of, what could be the reason for that drop in margin? Such significant drop in margin?
So, Biplab, the first reason is that we are following project completion method of accounting. So that is the first reason. And the second reason is that basically in the P&L, the sales, marketing and periodical costs is charged to the P&L in the current period itself. However, revenue from these projects will be recognizing in the year of completion. So that is the primary reason why this margin compression you are seeing.
Okay. If I may...
Biplab, just to add. So some of because project completion method, you recognize the revenue and everything at the completion, whereas some of the administrative cost and advertisement and marketing costs are accounted in the current year itself, with irrespective of the project getting completed or not. So that eats into the profits of maybe the other projects and other. But going forward, because it will get balanced once every year the projects will be getting completed. So this is just theoretical, but exactly if you see project-wise project, the EBITDA margins have not gone down at all. In fact, they have only increased going forward, which you will realize as the numbers get released further for the new projects getting completed.
There would be blended basis, there would be above 30%, right, sir?
Yeah, for sure. Even that is including our affordable projects. Our EBITDA margin across all the projects are above 34%.
Okay, sir. I'll come back in the queue. Thank you.
Okay, thanks.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Biplab Debbarma from Antique Stock Broking. Please go ahead.
To you, sir, you mentioned about despite 23 adding 23 million square feet in your in acquisition, you are still actively looking for acquisition. Just wondering, sir, if you can give some insight. Like if I see, barring one project in Borivali, I believe all the projects are in the peripheral suburb. We can say affordable space, maybe not Vasai. Vasai is not kind of affordable. Still, it is in the peripheral suburb and outskirts. So is it a conscious strategy? I mean, I'm just trying to understand, or is it just opportunistic? You can do even in premium, or this is a part of your strategy 3.0 that you would be mainly looking into affordable and mid-income. Yeah.
No, not at all, Biplab. In fact, that's the reason we have created a brand across all the across the spectrum. So separate branding for high income, uber luxury, and separate branding for mid income, and separate branding for affordable. So we are very clear and conscious that across all the segment we have to grow, and we continue to. So as you see, we have added one FMC Road project last year, last year I believe.
Yes, sir.
In the uber luxury segment, and we continuously scout for more projects. That's the only project we have acquired. We are scouting for it, and we are confident we will be doing some new announcement very soon. Same as mid-income, you saw that we did SK Resorts at Borivali, and I think Vasai, which is on the beachfront, is again in the mid-income segment. So we are going in mid-income as well. So again, affordable, obviously we have done lot. We know that. And that is obviously we got some good opportunities, so we didn't want it to. It's what's so tempting, so we didn't want it to miss this opportunities. Okay.
Sir, continuing with this, what is the status of the Nepean Sea Road project? What stage is the project in?
So it's obviously there are some of the things which we need to clear it off, and then the approval process and everything. It will take time for sure, because it's the part acquisition we did when we acquired the Orbit stake from the High Court. Thereafter, we are doing slowly certain parts of percentage of acquisition which is balanced. And I think very soon we should get those, and thereafter, obviously, approvals, and then we should be able to launch.
Okay, sir. Thank you, sir.
Thanks.
Thank you. The next question is from the line of Parvez Akhtar Qazi from Edelweiss Securities. Please go ahead.
Hi, good afternoon, sir, and thanks for taking my question. So first wanted to get an update on the Borivali West project. Where is that project as far as approval status, etc. is concerned, and when can we see a launch there?
So, Parvez, very frankly, the launch is, we need to get approvals. So approvals are in process. I can only share that much, and definitely we are looking at least 6 to 9 months for those approvals. So once those approvals are there in place, definitely we will like to launch it on yesterday basis. So we are equally keen to get it launched as soon as possible. But the approvals, which is again, it is the landlord's responsibility. So although my team is helping and assisting them to get the approvals, but we are pushing them a lot to get the approval ASAP as possible.
And second, what would be the completion timelines for our various under construction commercial projects?
I think we are talking about all these 4 projects of commercial which are under construction. All the 4 projects, I can say they are almost more than 89, at least 3 out of the 4, which is Andheri project, which is Sunteck Crest, and the BKC 2 junctions projects, which are on both the junctions of BKC, which is Sunteck Icon and Sunteck BKC 51. Both all 3 these projects are almost 80-90% complete. All the slabs are almost done. And I think we are very confident at least these 3 projects will be delivered in this current financial year itself. And Pinnacle also maybe early next financial year.
Sure, sir. Thanks. That's from my side. All the best for future.
Thank you so much, Parvez.
Thank you. The next question is from the line of Saurabh Gilda from Motilal Oswal Financial Services. Please go ahead.
Hello, am I audible?
Yeah, Saurabh. Yeah, go ahead, please. Saurabh.
Yeah, thanks for the opportunity, sir. So firstly, I just wanted to check on the commercial development status at the ODC. I know we had earlier deferred it due to the onset of pandemic, but now that we have good ecosystem of residential developing there, so like, do you still want to go with the residential, or do you have any commercial plans at ODC?
No, we will definitely do residential as well as commercial in ODC. We have enough land parcels there, so definitely we want to exploit the demand even in commercial. And so we are aware that obviously we'll be finishing these 3 projects. I think it is the right timing, I think, for completion of these 3 projects. So we want to add obviously a new commercial projects to our portfolio. So definitely we'll be looking to start that ASAP.
So any tentative timeline, sir, that when can we start that commercial project?
Let's say close to 9 to 10 months.
Okay. Fair enough, sir. And sir, lastly on interest rate trajectory, like I know the recent hike which has happened is too small to affect the demand, but from your conversations, like, do you show any change in strategy from the customers, or at what level of interest rate do you think that it can start hurting the demand from the customers?
So Saurabh, fortunately till now, whatever 40-50 basis point, I think 40 basis point, RBI has increased the interest rate. In spite of that, we have not seen till now any drop in velocity of the sales. And in spite of increasing the prices by 5 to 10% across all our projects, which gives more profit, and it also absorbs the inflation of the increase in construction cost. So that is a good, till now it looks really good. And going forward, at least if it is means the interest rate rises, at least let's say we all know that at least minimum 25-50 basis point in next announcement, or very soon we may hear from the RBI. But till that, I don't see any problem. Thereafter, it will be means I would be too futuristic giving any answer to that. I think for current status, I think it looks very cool, and it is not affecting the sales at all till now.
Right. Okay. Understood. Thank you, sir. That's it from my side. All the best for FY23.
Thanks, Saurabh. Thanks, Saurabh.
Thank you. The next question is from the line of Adhidev Chattopadhyay from ICICI Securities. Please go ahead.
Yeah, thanks for the follow-up. So first question is just a bookkeeping question on the consolidated balance sheet. The other current liabilities figure seems to have gone up quite a bit. Could you just clarify the reason why, or what is the reason for that? What adjustment that is?
So, Adhidev, Prashant this side.
Yeah.
Adhidev, as you are aware that the company is following project completion method of accounting, and because of that, the customer advances are now getting booked into the P&L, into the balance sheet, sorry. So because of that, the other current liabilities have gone up. Because earlier what used to happen is that, the customer advances used to get amortized. So because of that reason, that's the only reason why it is going up, sir.
So 1,200 crores around increases because of that, the advances collections you have done during the year.
That is one of the major ones.
Okay. Fine. Got that. So second question, just as a follow-up. Sir, what would be the inflationary cost you have seen for your new projects? I understand for existing projects you are maybe at various stages of construction, but for your new projects it will come up in already upcoming phases in the existing projects. So the new projects, what would be the average cost increase you expect to see because of the cost inflation?
So Adhidev, if I talk about across the spectrum from affordable to mid-income to luxury projects, I think the increase is not more than 500 to 1,000 rupees a square feet, let's say, max. So, and that has already been factored by the market, and everybody has increased the pricing in every geography. So that wouldn't affect at all. I don't think will be affecting anyhow to any profitability or any viability of the projects, or any compromise on the EBITDA margin or something.
Okay. So, and just last one question if I can squeeze in. Sir, this Shahad project, what is exactly the status of the land and the approvals? Because just give some color on that.
So acquisition is obviously, it is at an advanced stage. We have to get that obviously before signing the definitive document. We need to get that sanad cleared, and I think that is in process by the landlord. I think it should be cleared very soon. And once the sanad is cleared, I think we should go for the approvals. And what we are targeting is, again, we are targeting out of all the new acquisition as promised, as committed by us, that we will launch at least one project in this year. We have already done that as Vasai launch, and we are quite optimistic of launching one more project in this current financial year.
Fine, sir. Okay, sir. Thank you and all the best.
Thanks, Adhidev. Thanks.
Thank you. The next question is from the line of Varinder Bansal from Omkara Capital. Please go ahead.
Hello, sir. Good evening to all of you. My simple question is, sir, Sunteck for me is a story in terms of what you guys have done in the last, say, 25 years. You're trying to do in the next 5 years. And with the environment changing now in terms of interest rates moving higher and commodity prices moving higher, do you think the pace of what you have envisaged for the company will get delayed? Because I think you are targeting around 1,800 crores of pre-sales and some 28,000 crores of sales projects which are undertaken for, I think, many years to come. With the external environment, do you think are we at the same pace what we were 6 months back?
Yeah, definitely. In fact, Varinder, thanks for asking question, I would say. We have been very, if you have seen that Sunteck's, in fact, history is not 25 years. First of all, I'd like to, sorry to correct you, 15 years. In 15 years maximum we have seen the headwinds, and still in spite of the headwinds, Sunteck has grown. And we are quite confident with this increase in interest rate and also some inflation. I think we don't see any, because we are seeing currently the sales and especially what we launched just now, our Vasai project. It is clear indication we got an overwhelming response. What I think we are getting response more than our expectation. That is a clear signal that it is not affecting the volumes and sales with the increase in this slight interest rate. And I don't see the plans for Sunteck changing, and we continue to maintain our pre-sales number for this current financial year target of 1800 crores.
So when you say 28,000 crores, that will mean over a period of how many years, sir, if I may understand that?
That is 8 to 9 years.
8 to 9
Because these are all projects which are like 50 acres, 100 acres, 150 acres. If we talk about Naigaon, it's 150 acres. 50 acres in what we talk about Vasai, what we have launched. 50 acres, more than 50 acres in Sahad, Kalyan, what we talk about. So all these projects, and these are like projects for 8 to 10 years. So we are talking about these numbers, obviously 8 to 9 years. And we continue to acquire more projects going forward.
But isn't it too much, sir, to acquire new and new, because we already have a lot of projects on hand? And my second question, just to complete it, will be, I think we have done, appreciable number of acquisitions in the last, 2-3 years. Will we need to raise capital now? Because under JDA we have done acquisitions, but since now execution is coming to forefront, do the company sees any chances of raising capital to execute these projects faster?
So definitely we don't see we need to raise any capital to execute these projects faster or anything, because the moment we do pre-sales, we are cash positive almost in every project what we launch. So we don't need cash in spite of our acquisitions, and that's we are maintaining that we'll continue to maintain our debt levels similar in spite of new acquisitions. That's our strategy, and we'll continue to do that. And as far as I think I will only say, you asked me, is there? It's already too much. I don't think it's too much for Sunteck. We are hungry and for the growth, and we'll continue to grow.
If I can squeeze in one last question, sir, on slide number 28, I think the numbers what you have taken for projects for FY22, 23 versus 23, 24, this is what I'm looking at. So we are not seeing any incremental sales happening in projects on the top 4 projects in FY23, 24. What could be the reason for that, sir? Like Goregaon, Naigaon, Vasai and Kalyan and Vasai?
No, hi Varinderji. If you see on slide number 28, in slide number 28 in FY23, we are looking at launching ODC Goregaon West, even Naigaon, Vasai and Kalyan. So all the 4 projects we are looking at launching, and those 4 projects plus are already completed projects, they will contribute to the pre-sales that we are looking at of 1800 crores, sir.
Oh, yeah. I'm talking about 23, 24. That 23, 24, we are not looking at incremental sales from the top 4 ones, which is ODC, Naigaon, Vasai, Kalyan, Vasai.
We are looking at, sir, that is in that point. That number is not cumulative. It is per year number, sir. So if you look at FY23-24, we are looking at 0.6 million from ODC. We are looking at 1 million from Naigaon.
I understand. I'm saying, Prashantji, we are not doing incremental, from 0.6 million going to 0.7, 0.8, or we are maintaining the same pace only, right? Every year.
Varinder, Kamal here. I think we would like to be conservatively making the statement. We'll be always happy to make you happy by giving better numbers. We don't want to overcommit and underperform. We'd rather prefer to undercommit and overperform. That's what we will go with, Varinder.
Got it. Sir, last question. There's a lot of newcomers who are coming to Mumbai. I know your geographies are very different compared to other places. Do you see now supply side increasing in the real estate sector? Because a lot of projects are now coming up, Prestige coming very ferociously in Mumbai and all. So the supply side, which people were talking about that it is decreasing. Now it seems like supply side also in the real estate sector increasing again. Do you think that's could be an issue going ahead?
No, Varinder, I think it's always better to have good players coming in and having a healthy competition. I don't see, I think the demand have increased, and with few players adding up, because we know all of us that a number of players have gone out of the business. And definitely at every time when the market is good, as I said, that this is the first time headwinds, we are really seeing a good tailwind, I would say, tailwind in last 10, 12 years. And definitely there will be new players entry, and again we'll see some players going out again. But I don't see any concern for Sunteck. We are well placed, and I think I don't see any concern for that.
Thank you, sir. Thank you so much.
Thanks, Varinder. Thanks a lot.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the Chairman and Managing Director, Mr. Khetan, for closing comments. Over to you, sir.
Thank you all for taking out the time from your busy schedule today. In case if any of your queries been left unanswered, you can get in touch with me or my team. We look forward to your continued support. Thank you once again for joining us today, and please be safe.
Thank you. Ladies and gentlemen, on behalf of Sunteck Realty, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.